and that sound means we are now live here on our YouTube channel. It's our daily halftime report, the show that we put on here at Tackle Trading, where we get the coaches together to analyze the market charts, the news, technical analysis, anything that's happening across financial markets, commodities, currencies that we find important, relevant, and interesting. Break it all down so you guys can better run your daily routine. Welcome out as you're coming on in here. Get the chat going up and getting it live. Let's make sure we keep it positive. Let's keep it focused on markets like you guys always do. And as we always do, hashtag Team Tackle to start the show. We got Gamestop earnings. We got Adobe earnings. We've got oil bouncing today. We've got the cyclical trade kind of back on for one day here. Energy looking good. Industrials looking good. Intel news. We got a lot to get down to, so we're going to get right down to business. But before we get going too far here, welcome Tyler and welcome Matt to both of you. Tyler, you got a webpage up here called The Huddle. This is our new product that we've been putting out here at Tackle Trading. I want everybody out there to get excited about, start using it. And guys, we released this before the halftime report, about an hour before the show, 9:30 a.m. my time, 11:30 a.m. Eastern, so that you can get the news of the day real quick, real simple, real clean, get all the information. You can listen to it either on the go as a podcast. And Tyler, if you'll notice up on the top right, people can find the iTunes directly right there. Just click that little button and it takes them right to the iTunes page for The Huddle. Or you can get the Spotify link as well. You can go and subscribe on any of your favorite podcasting apps. Huddle's something we're really excited about here at Tackle Trading. Matt, talk about it for a minute if you can.
Yeah, we are excited. We do so much long form content because we all like to geek out on technical analysis or fundamentals or, behavioral analysis. Our halftime reports run anywhere from an hour to 2.5 hours. Tyler's just very long-winded. But outside of that, we know a lot of people are on the go, and so we wanted to make sure that our community had the ability to, under 10 minutes, get the top storylines of the day and what's impacting the market. And, quite frankly, I love the fact that a lot of our community is listening to The Huddle. We post it at noon Eastern Standard Time every day, 10 a.m. Mountain Standard Time, 30 minutes before the halftime report. And we know a lot of our community are listening to The Huddle and, joining us for the deeper dive on analysis. And we love it. We're excited about The Huddle, and we hope you guys enjoy it as well. And, we get asked this quite a bit, so I'll just say it. But the best way to support The Huddle and to support Tackle Trading with The Huddle specifically is iTunes reviews. Allowing us to get out that message of The Huddle out there is just so powerful. So if you do love The Huddle, want to support it, if it helps you out on a daily basis, fantastic. We'd be very grateful and thankful if you take a few minutes of your time and give a nice little 5-star review there on iTunes.
Yeah, I'm excited about it. Cody was telling me in the lounge this morning, a lot of students are already starting to listen to it. We appreciate that support like Matt talked about. Start your day every day with that.
Quite frankly, Tim, listening to your sexy little voice to start your day, coffee and Tim's voice in your head, come on now. It doesn't get better than that.
Tyler, I do have that deep, smooth radio voice. I could have been smooth. Maybe Paul Harvey was my dad. I don't know. I got to call him.
Mark has wondered that many times in his life. I'm not sure it was Paul Harvey he was talking about, though.
We're not going there. Yeah. All right, let's get down to market analysis. We've got an interesting day in the markets here, guys. Quite a bit going on. We've been watching the cyclical rotation from sector to sector to sector. It's like every other day, either tech has their day, then it's back into energy or whatnot. Energy, financials, industrials, who have been such a juggernaut, the leaders in the market for the last 4.5 months, they were on a little bit of a pullback. Now they're holding. I want to do a sector roundup a little bit later, but let's start here with the broad markets. Ty, S&P 500, just from a chart perspective, what are you seeing in the biggest index in the world?
This held up pretty well yesterday. You're seeing, I think, some divergence. You're seeing some areas of weakness kind of decouple. Small caps, emerging markets, those guys are getting whacked here recently. I do like on the S&P how we held the 20-day moving average. I mean, if you take a step back, you can't be mad at a market that pulls back to the 20-day moving average. This is a frequent occurrence. It's just, normal price behavior. For those that got a little shaken up yesterday, this is a pretty good start to the day. Market gapped higher. It's holding that gap. Look, we could have gapped and then gotten sold into and rolled over, but so far it's holding up, which I think is good. We have not yet broken above yesterday's high. And so if you look at the sequence here, the last 3 days have had lower daily highs. Today's low is still below yesterday's high. So that's basically translates into an inside day or an inside bar, which means it's nothing really to write home about. But I like that it's green, Tim. I like that buyers showed up at the 20 MA. I think it keeps the bull hopes alive. Now we just see if we can take out yesterday's high and get a nice bounce.
Well, can I say something to this technical condition in the marketplace? If you remove the news from the equation over the last 2 weeks and you just focus on the technical condition of the market, don't you have an overextended breakout that is simply retesting the breakout channel?
Yeah.
And isn't that fairly standard when it comes to overextended breakouts?
It is. And I think the thing, just real quick, that has to scare bears is this bounce was legit. Like this was a big bounce off of the lows. And that's the type of thing that when that happens after the market looks nasty, I mean, who's to say that kind of crap can't happen again? Like that's the type of stuff that keeps bears just
it keeps them in
nervous.
hibernation. It keeps it right. You look at the technical condition of the marketplace, and I don't see this as behaving irrationally in any capacity. Now, again, the volatility from really kind of the last three and a half weeks. But if you look at just this week in comparison to the previous two, you're seeing the market simmer down a little bit, settling down a little bit, volatility subsiding a little bit. The market's not violently shaking out every other day, and you're looking at an inside candle off a bull flag on an overextended technical pattern. Honestly, I'm looking at the market and I'm saying, what do you not like here?
Yeah.
I mean, don't get me wrong.
Especially
the
compared to
NASDAQ
yesterday.
and the NASDAQ looks a little gross and it needs some time, but specifically in the broad market, the S&P, I don't have any concern here technically.
Well, and I think too, when we look at the sectors, that they came back and bought the dip in the leading sectors that you wanted them to. And so I think that kind of restores your faith after this multi-day drop.
Yeah, I think after yesterday, having the market come in and doing what industrials is doing today, doing what energy is doing today, Bitcoin back up off the lows, the Dow kind of, performing fairly strong here today. The cyclical argument got a little cold water yesterday. It did, right? I think people got a little nervous about that cyclical movement. Today kind of gave them a little bit of reprieve and said, okay, we're good for another day. My confidence is building back up with the cyclical based on what we're seeing in the recovery here today. I think it's a positive response to what could have been something a little bit more nasty. And I love what you said, Ty. What's got to scare the bears? You're right. What's got to scare the bears is a day like today when yesterday everything's selling off and you can't clip the 20-day moving average. And then on a day later, energy and industrials all confirm off retracements or flags. Yeah, I'm with you, Ty, on that read.
Yep.
And I do think we should flash through the sectors here in just a few minutes. I do want to look at the broad indexes first, though. Like you guys are talking about, there's so much interesting action as you go from index to index. The S&P is holding up very, very well. Ty, can you run me through the Dow, the NASDAQ, the Russell, kind of give me a comparative of what you're seeing in the other ones?
Yeah. So as far as the Dow goes, remember this has been the leader, right? Industrials woke up. Your Caterpillars, your Deeres, your Cummins, those areas. So you had the pullback this week, but again, this thing was up a lot, like 306 up to 332. You can't be mad that it pulls back a little bit after that big of a run, especially with the stodgy old index like the Dow.
Yeah, it's the Dow. It's Grandpa's index.
Yeah. So, but look at today's bar versus yesterday. Like this is up more than the S&P. So you're seeing relative strength in the Dow today. It didn't even go to the 20 MA. So whatever, it's just a nice pullback after a big increase in momentum. There's nothing I don't like here.
Based on what you're seeing in the Dow here, and obviously it is the strength of the market right now in the short term. It fits the theme in the market perfectly. Obviously, finance, energy, industrials. The cyclical movement is the Dow, right? I mean, that's just what it is. And so it's obviously understood why it would be leading. It is the index that represents the entire cyclical movement here. But with this little I don't even know what you would call it, maybe a flag-based pattern coming down. I mean, it's not your standard pullback, it's not your standard retracement. Got caught up on the overnight action and on Sunday, a little bit volatile, but I see this as strength here, Ty. And I see today is, and specifically looking at the diamonds here, and for those of you that are newer, diamonds are just the Dow Jones ETF, DIA. But when you're looking at the diamonds here, intraday, Ty, if you can drop that down into a 30-minute chart, that 328 level, I feel like your confidence is growing based on the intraday chart here in the Dow. But I think if you can clip that 328 level, I don't see there being any bears stopping that at that point. That's a pretty good continuation trigger here.
I would agree. Yeah, completely agree.
So let's play the game. We get confirmation at 328. What about deer here on that deeper retracement, Ty? I say deeper. It's the 20 period moving average.
That's the new deep.
It feels deep. It feels deep these days.
Yeah. Yes, it's a good pullback. Yes.
Okay. What about General Motors? General Motors had a little bit of news here today. Inside candle, a little bit of bullish harami type feeling there, slowing momentum. What do you think about something above confirmation here?
Yeah. I think taking out yesterday's high would be the line in the sand for me on GM. But
yeah,
yes.
that's kind of where I'm looking at too. So you look at the Dow here today, you look at the industrial sector as well, and that's going to give you a little bit of a flag with, certain degree of confirmation as well. And the industrial sector is actually performing relatively strong in comparison to the rest of the market here. You got General Dynamics on a potential breakout. You got GM on a potential flag. You got John Deere, Caterpillar. You got your pick of the litter here in industrials. My question to you is, based on the price action we're seeing in the Dow, with that confirmation above 328 being the continuation of that movement we're seeing earlier today, given what we're seeing in the relative strength on industrials, is there anything else you need before you say it's time to push the chips in a little bit in the industrial area of the market?
No. In fact, and again, I think it depends on which chart you're playing. But once you get the sector pushing above short-term resistance levels, you get maybe a cat or one of these other ticker symbols echoing that. I mean, cat's already above.
Well, cat's confirming. I mean, so, and I guess the reason I asked the question, Ty, is because it's a rhetorical question. I know you don't need anything, right? I know what you're looking at. You're the killer out there. You're the assassin. You're the architect. But there's a lot of newer traders in our community that are always looking for something else to give them the confidence. And what I'm saying is, by the time you get that confidence, by the time you get that data, all of a sudden the price is already over and you're the last one to buy.
Yes.
Right.
Well,
Can you talk about that a little bit?
Yeah. And this timing is actually good. We actually had this discussion on Monday morning's Traders Lounge in regards to triggers and trade-offs. The thing you have to remember is, it's like, I don't want to get in. I don't want to jump in the pool unless I know for sure it's going to go up. And it's like, look, no matter when you jump in the pool, man, there's always the chance it goes right back down. And so it's a trade-off. Like those who get in when, say, Caterpillar breaks above a prior day's high, do they have less confirmation than if you waited for it to go up 2 bars or 3 bars? Yeah, I guess. But look, they have a better price too. So the thing is if you're putting a stop loss under support, the more bars you make it go up before you buy, on the one hand, you could say I have more confirmation, but on the other hand, you're this much further away from support now. Like your risk per share goes up the longer you wait. And because of that, you're not getting something for nothing.
Yeah. Mm-hmm. And I look at it as like we were looking at the Dow Jones, right? We were looking at that specific ETF. And we said, okay, if you achieve 328, it's go time on the Dow, right? Mm-hmm. But Caterpillar's already go time.
Yeah,
like that's already go time. The industrial sector's already go time. That's just additional confirmation. That's all it is. It's not a primary confirmation tool. You already got that on industrials, and you already got that on Caterpillar specifically.
Yeah.
So I just, the more data you need to justify your decision on price, yes, it makes you feel better. But like you talk about, sometimes the more data you get, all of a sudden you might have a better probability, but you don't have a good reward to risk ratio.
Mhm.
Yeah, I think when a stock goes up 3 days, all that tells me is I should have bought it 3 days ago.
Or minimum, like after
Or
the
2 days, at least 2
on
days
day
ago,
3,
right?
you're over. Like on day
Yeah.
3, I'll tell you, in the scatter report meeting time, I don't know how many times we've pulled up a stock and it's into like day 3 of an upward movement in price after confirmation, and every time Tyler's like, no, you should have bought yesterday. What are you guys doing?
Yeah,
Like,
yeah.
but it's true. You got your confirmation, you got your aggressive confirmation, you got your conservative confirmation. There's not a third.
No.
Go.
Yeah.
There's no Goldilocks confirmation.
Go.
You either
There's
gotta
no
go
38% retracement. Go.
You got to just do it.
Yeah.
By the way, the XLI is looking beautiful here, like you guys are
Yeah.
talking about. I love the dive through some of those stocks in the space. I got to tell you, that it's kind of a dealer's choice type of environment. You guys were looking at
It
CAT.
is.
I like Deere. I like GM. I like the momentum in 3M. I mean, there's a lot of really good potential choices out there within this sector. So
Yeah.
I think people could absolutely use that top-down analysis approach. Go into the sector, then go into the names and find
Listen,
your pick of the litter.
It's 31 flavors in industrials. Do you need a reversal? Let's go find it. You want a continuation momentum trigger? We can get it. Do you want a standardized retracement? Let's go find that. You got your breakouts, you got your retracements, and you got your flags, and it almost feels like a standard typical market.
Mm-hmm. Yeah, absolutely. By the way, while we're on the sectors, there probably isn't a better time to just kind of flash through them though, Tyler, because it's not just XLI here today that's grabbing our attention. Obviously, I like what energy is doing. We'll get to the crude oil news here in just a bit. I like what some of the other, like Matt, you mentioned that the cyclical reopening type themes that have been hot in the market. They'd taken a few days off, if not even a week off here for energy. They had the deeper pullback. I mean, energy, that's exactly what you want to see if you're a bull on energy looking for a buy the dip type of confirmation candle, in my opinion. Tyler, what do you see in the chart?
Yeah, I agree. I think one takeaway, this tried to bounce off the 20. There's when a pullback tries to bounce and fails, if it wants to be kind, it won't trigger. So what you'll notice is if I was going to buy the dip on XLE and use a prior day's high as my trigger, lower high, lower high, lower high, potential reversal candle, but didn't break with the prior day's high, and the next day didn't confirm, came right back down. So I think what's nice about XLE is even though it tried to hold a 20, it didn't go up a bar, trigger you in, and then come down if you were trading this particular chart, right? So ended up being a deeper retracement than you would have liked. But whatever. I mean, you don't always get what you want. You have to adapt as the market, changes. And I think today is all the confirmation you wanted. Like this is a good example. Do I need another up bar? Why? I mean, we just had 1, 2, 3, 4, 5, 6, 7 bars with lower highs. And then today changed. I don't know about you. That seems to me like a change in character. It seems to me like a pivot. It seems like it's done going down, started going up. Maybe it won't go up 5 bars. I don't know. I just know it turned around and it's given me confirmation that the 7 bar drop is done. So from a risk reward perspective, this is your trigger candle. If you were looking to buy the dip in energy, I don't know what more you could want as evidence that it's done going down. Doesn't mean it'll work. It does mean that you have the confirmation you need and the risk reward you need to take a shot.
Mm-hmm. Yeah. And obviously, I mean, like you're talking about 7 bars in a row coming down, you get the 1 bar going back the other direction. You did have some volatility around the space. And part of that is based on the volatility we've seen recently in crude light, just because they're always going to stay correlated in the short term on a day-by-day basis. News hits the wire, it's going to move the energy sector. Although energy, in my opinion, is holding up much better, much more interesting. I'm not looking to trade crude oil, but crude oil is bouncing today. So let's go to CL real quick. We'll come back to energy and continue the conversation on that. Part of the bounce else here is technical, came down to the 50 period moving average. Part of it is news, though. There was a shipping, ship that was going through the Suez Canal that got blocked. And I didn't know how much global traffic goes through that Suez Canal. Nearly 30% of the global ship traffic does move through that. It affects so much international trade, even though it was only a 1-day thing and they're now already starting to get ships back through there. It gave a little bit of juice to crude on the intraday. And then the supply numbers today came out, and crude is continuing to run off of that news that just hit the wire a couple of hours ago, where it had a little bit bigger build than expected. Maddie, what are you reading in crude oil here and energy sector specifically?
Well, obviously, whenever you get one of those situations where a major waterway like the Suez Canal getting shut down is going to have a massive impact on the oil markets in general. It's going to have a secondary impact on the energy stocks. But yeah, the Suez Canal has been, when was it built? 1949?
Ooh, that's a great question. I don't know. I'll look it up.
Like I might be thinking of a different canal. There's a few major ones, but
No, I'm getting 1859.
yeah, okay, it was well before then. All right, so but anyways, it's what'd you say, about 30% of trade goes through that?
Of shipping trade specifically.
That's a massive thing, and so you're gonna have a massive impact on your candlestick. That's not surprising. Crude is a very tough nut to crack right now, though, and I've probably been one of the more concerned coaches at tackle trading on crude over the course of the last month or so. In the halftime report, I literally said people need to recognize when a trend is over before this trend was over, and that was due to the shifting volatility that I was very concerned about. And I believe, Tim, you asked me if I was interested in the breakout of 65 2 weeks ago, and what did I say?
Nope.
No, because I think Putin's going to be selling at 70.
Mm-hmm.
So I've long felt that the trade in crude was not from a directional perspective, and that's simply because of the shifting volatility we saw mid February on, and just historical ranges that certain things fundamentally and economically happen in that $65 to $70 range. So I don't think you're playing here in energy on the dip. I mean in crude oil on the dip. But I also didn't think you were playing on the breakout of 65 or the retracement after the shift in volatility. So that's par for the course. I do think, though, that the dip, the 50-day moving average can be an important test, although I'm not interested in it, given the fact that we really haven't seen a 50-day moving average, test in this type of market condition. Although holding this short-term level is going to be important, though, for energy. And so even though I am not interested in crude oil at all here, I am interested in energy.
Mm-hmm.
And so when you are looking at the energy chart, it's going to get caught up into the same type of volatility that crude oil will. My argument for energy is a fundamental argument that energy stocks will catch up to the strength that crude has based on the average price of crude increasing over time post-pandemic. And so, and that's in the short term. That, and I've said this, as long as crude maintains a net average price that goes up over time, we're going to be perfectly fine on this energy type play. However, that's this in the short term. What's happening in crude oil is certainly having an impact on this energy chart. But I think energy got caught up a little bit in the cyclical, that cold water being thrown on the cyclical argument. Then you had the energy type situation a few days ago. So I think you're looking at it saying, okay, the 50-day moving average is a very important test for crude. You gotta love the increasing in price today based on those geopolitical factors out of the Suez. But here, I think that just gives you greater confidence on the pullback in energy more than it does trying to chase that volatility in crude itself.
We got a great question coming in here. He even said dumb question. No, Eli, this is a good question. And I used the super chat $4.99, Tyler. We'd be able to, get a little
Super
lunch,
chat gets answered
get
every
a couple
time.
of donuts for that. Appreciate you, Eli Levi. He says,
Eli,
what?
you buy me a cup of coffee and a donut, you get your question answered immediately.
Absolutely.
Even if I'm on a soapbox on the Fed, you get answered, Eli.
Oh, don't give people ideas. They'll start asking
Test
questions
it.
during
Test
events.
I'll rapid fire.
Eli says, what affects the price of these sector ETFs? Is it the price action of the underlyings, or is it the price action of the people trading the ETF directly?
Can I
Tyler,
take
you want to
that?
answer?
Let's give it a tie.
Yeah, Eli, it's a wonderful question, Eli.
It's both. It's
Yeah,
both.
it's both.
When you look at the fund owns, all the major stocks in the energy sector, right? Exxon, Chevron, ConocoPhillips are like the main ones. So when somebody buys XLE takes that money and purchases the individual stocks, right? So if you get money flowing into the fund, that trickles into the individual components, right? And then on the other side, if somebody's putting a bunch of money into Exxon directly and Exxon's stock price is going up, XLE owns Exxon. It's a shareholder of Exxon. And so it's going to boost the fund because Exxon is 10, 20% of the fund, right? So it works both ways. It doesn't matter. It doesn't matter where the demand comes from, whether it goes into the individual components or whether it goes into the fund. Both of them will drive kind of each other to a certain extent.
Mm-hmm.
Yeah, and people hate that answer, both, but it's true. It's like, okay, which one's first?
Well, but think about it intuitively, right? It's like, let's say nobody bought XLE, nobody, and everybody just bought Exxon, Chevron, ConocoPhillips, and all these other energy stocks. Well, XLE is a basket that owns all those guys. Mm-hmm. It represents the sum total value of the individual components. So if the individual components are getting bought, the basket has to go up because that's what is in the basket, right? And on the other side of it, if nobody bought Exxon, Chevron, ConocoPhillips, and they just bought XLE doesn't just take that money and it just goes up in the bank and it's just
wait.
cash forward.
They don't put it in their checking account?
No. They invested in those stocks. They use
allocate
the funds
it, right?
to invest in what they're supposed to. Yeah.
And they allocate it based on their weighting of the fund.
Mm-hmm. Exactly correct. If they didn't do that, if they just did shenanigans, they'd be shooting themselves in the foot. People would be like, XLE, you are not doing what you were designed to do. I'm not going to put money in you because I have zero confidence that you're doing what you ostensibly, based on your prospectus, are supposed to do.
That would really
they would never do that.
Efficient market theory.
Well, if they didn't actually buy those stocks, then obviously they wouldn't even be an ETF. The SEC would pull their license for that.
Yeah, it's just, think about it like this, Eli. Yeah. Either you're going to buy the shares or you're going to give the bank the ability to buy the shares, but the shares get bought.
Mm-hmm. Well, and actually, I would add one other thing, and it may not be specific to this sector ETF, but just in general, when you have a fund that starts to trade different than the value of the underlying holdings, there's an arbitrage opportunity. This is why the S&P 500 is like linked to the hip to those 500 stocks, because if there's a discrepancy between buying 500 stocks individually and the fund, then you can arbitrage it and make money for free. So they trade in alignment, like very, very close.
Oh, and algorithms love those situations.
Let's say,
but honestly, Tyler, we're talking fractions of pennies on the S&P.
Mm-hmm.
100%. Yeah.
Like it's not big.
Yeah, but it just shows you there's these mechanisms in place where the funds pretty much trade at what their value of the underlying holding is.
Mm-hmm.
Eli, I hope we answered your question, my friend.
We did. And I think one last thing we can do just in continuation here, just look at Exxon and Chevron real quick and look how correlated they are to XLE. I mean, you're literally going to see almost an identical chart. And they don't always do this, but they are trading lock and step in pattern with the sector right now. Exxon, Chevron, ConocoPhillips, the biggest three in that space, very, very similar patterns. So
when volatility hits the market, even slight increases in volatility, almost everything trades identical.
Yeah.
It's not like fear impacts Conoco investors different from Exxon.
Mm-hmm. Yeah, I'm with you. I agree. By the way, we've already looked at XLI, XLE. Tyler, was there any other sectors that grabbed your attention here today? Because I know that obviously tech is kind of rotating away from it. We're getting that, simple mechanism happening in the market. Either tech's up or the rest are up on a day-by-day basis. Today, tech is down. Anything else grabbing your attention?
I mean, metal and mining popping back a little bit, like FCX and those kind of plays, but no, I think we hit on the main ones.
Sounds good. Let's flash through the rest of the commodity markets while you're speaking about metals. Let's go to gold next, real quick. Then the dollar, then Bitcoin. Matt, you mentioned Bitcoin kind of holding up nice off of a little support bounce. Ty, quickly flash through the gold, the dollar, and Bitcoin if you can.
Yeah, gold. So I think one of the things you have to like about gold this go around with this bounce is it didn't get rejected near as quick as the last couple, right? Like ever since this failed breakout at the beginning of the year, rallies have been stuffed pretty quickly. This one rallied and it's kind of hanging up a little bit. So it hasn't reversed the trend yet, but I mean, if you're looking for a silver lining, it hasn't gotten crushed yet. So it is holding up okay. You need more, you need to break resistance and, start forming higher highs and higher lows. But I guess on a bright note, it is kind of hanging out and didn't get immediately smoked. So I think ultimately you gotta wait for this thing to resolve itself one way or the other. It looks kind of neutral in a very short run, just consolidating. But like I said, I mean, it did bounce off a major longer term support zone. So far, it's holding up okay, but we need more than that really to reverse this downward trend.
Yeah. Although that 1750 is looking nice, if we can clip that, that will be the start of that reversal developing. The dollar real quick, and then Bitcoin if we can. Obviously, Powell and Yellen are back on the hill. They pretty much have been reiterating the same messaging the Fed has been putting out there for weeks and weeks and weeks. Yesterday, they did admit that stock market valuations are a little too high. Said also they're not too concerned about that. The dollar's back up near $25. I know this has a higher pivot high, higher pivot low developing trend in there. I just don't trust it. I don't see it. I have no interest in going long dollars here. What about you though, Ty? I mean, what are you seeing just from a technical perspective?
Yeah, I will tell you this is having an impact on stuff. When you look at foreign stocks, they're rolling over. Like emerging markets, for instance, really doesn't look great right now. So this strengthening dollar.
Wait till you see the emerging market currencies.
Are they rolling on this too? Right?
Yeah, dollar's going to pound them.
Yeah.
And can I speak to that very quickly, Ty?
Sure.
Not to step over on you.
You're good.
But an increasing dollar really does massively impact the growth opportunities of the emerging market currencies. And so like it's going to be a difficult short-term ride in the currency market with the emerging markets right now. There is some concerning data there. And we're not just talking currency or monetarily. Like, guys, it feels like we're light years in front of some of those markets from a pandemic response.
Yeah.
Like light years in front of them right now.
Well, they've gone up a lot. I mean, they almost doubled off the lows. So that, and this is arguably one of the more concerning pieces with anything that rips higher is how much of the future growth has been pulled forward. And if you get some hiccups, there's going to be a little bit of give and take here or back and forth as it tries to find what's maybe a fairer value than what we were optimistically pricing in, right?
Yeah, I'm with you there. The emerging markets can absolutely fly. There's no doubt. And I don't think we should think the emerging markets are done here, but short term, I'd definitely look elsewhere.
I would as well. Yeah.
Yes.
Yeah,
yeah, Tim, what was that for you, UP?
No, Bitcoin.
Oh, Bitcoin. Yeah. Dude, 20 MA, man, it's a beast. You know what's interesting is the volatility is compressing a little bit.
Yeah.
I remember when this thing would go down, $7,000 in a day. Well, it's chilling out now.
Careful. I don't think it's going to stay chill. I don't think
is Bitcoin the new Walmart? Is that what I'm saying? Is Bitcoin?
I believe that's what I heard.
Is that what you said?
Talking short-term, friends. Okay, don't take it too
all things are in comparison to its individual volatility self.
Yeah, that's right.
I like the
I agree. It
baser.
has settled down a little bit.
Yeah.
I mean, you were talking about, and it's just a little bit, but you are talking about a 20% decrease in volatility over the last week.
Now I have a question. Wasn't part of the argument for why this sold off that was it Jerome Powell that said something negative about crypto? It's not a good store of value or something.
Well,
Don't
that
get
was a
me started.
headline. Be careful what you wish for here.
Listen, but that was a headline, right? Am I making that up, or
he
was
did.
that
Jerome Powell, it was the worst case of someone speaking their book in modern history.
What? That's what I was going to say, and that's surprising. Why?
No,
Because your whole premise on Bitcoin was that the Fed chair would say it's a store of value.
Yeah.
Like, what do you expect?
Let me give you the headline news. Bitcoin is a speculative asset. We call them speculative assets. We want to say the word speculation as much as we can in this sentence because it's a highly volatile speculative asset, but we don't see it in comparison to the dollar. We see it far more in comparison to gold. So gold and Bitcoin are both highly speculative asset classes. And although we would never, ever, ever invest in Bitcoin, we do invest in gold. That was the news.
Yeah. And that's news, right? Because
like,
you would have thought he would have said, "Oh, by the way, we're now buying Bitcoin." You know,
this man runs the central bank and is one of the most powerful people in the world.
Yeah, just things like that I think are silly. It's like that's why you sold Bitcoin. The people who sold that day, yeah, I'm sure. I'm sure that's why.
Although Elon did say today you can buy Bitcoin, use Bitcoin to buy a car.
Thanks, Elon.
Thanks, Elon.
Yeah.
Elon, Bitcoiners are starting to not like you. Stop talking about it.
Right. I don't need your commentary. By the way, I would not, even if I was going to go buy a Tesla, I would not use my Bitcoin to do it. It's a higher transaction cost than using the US dollar. So Bitcoin is a transaction.
And opportunity cost.
Yes, of course.
Dollars go down over time. Bitcoin is an asset.
That's right. That's right. So yeah, thanks, Elon. Thanks for hitting the Bitcoin.
Thanks, Techno King.
Again. Techno King. No doubt.
Hasn't that already been the case though, or is that new?
You could always use Bitcoin to convert to USD.
No, it would convert to USD.
But he's saying you can do it directly now.
Yeah.
Just use Bitcoin. Give us your Bitcoin.
But was that not true with Tesla before? That you couldn't buy Teslas?
They would convert it.
It was converted.
Yeah, they would convert it.
When most corporations say they accept Bitcoin, Ty, they don't actually accept Bitcoin. You can just use Bitcoin through the payment processor and it converts it to USD.
But wasn't that already the case?
Don't get us started on teaching people how currency conversions work.
It's always been the case. But I don't think Bitcoin holders actually want to use their Bitcoin to buy a Tesla.
Hey, wait till they figure out when you buy something from Europe and we do currency conversions.
Wait, are they accepting euros now? Can you buy a Tesla with a euro?
I'm not talking about this right now.
All right, let's move into stock talk here next.
I feel like I met somebody on the street. They just found out about Bitcoin.
So you can use these
digital
tokens.
Wait a second. Bitcoin? Yeah, let me tell you about Bitcoin.
Let's move into stock talk. There's a lot I want to actually get to. There's some interesting corporate news here today. You did mention the GM news. Let's do that one first, actually. GM, I do like the chart. You guys brought it up earlier with industrials. They've got to close one of their production facilities in Missouri because of a global chip shortage affecting supply chains, Matt. This has been affecting this industry throughout this entire process. Is not just semiconductor companies. It's also companies like GM that are being impacted as well.
One might ponder why GM's not down more on this news. Because this is extremely well-known news on the semiconductor front about the shortages in chips around the world. Like, try to go buy the Ryzen 7 new version from this year, AMD semiconductor. Go get on that wait list. So it's news, and it's certainly newsworthy, but it's well known by market participants, and I think that's one of the reasons why GM's not down a little bit more today. I personally like them taking the blow here. Like, you're in an environment where you're down 3 days in a row. You're testing a fairly important short-term support level. The market is on a little bit of thin ice, specifically not in industrials, but the market itself. GM got punched today. It took the punch.
It did.
Kind of like that.
Yeah, you gotta like that relative strength. Little doji here on negative news day. You would think it could have sold off. It did not. So I agree with that.
More people need to learn how to take a punch, Tim.
I agree. You got to be able to take a hit and
Take
keep
a hit.
on moving. No doubt about it. Other corporate news, Walt Disney next, if we can. They are going to be releasing 2 movies in conjunction with AMC, and they're doing something interesting here. Their blockbuster release of Black Widow, they're going to be doing it in July, but they're going to put it out on Disney Plus streaming service and in the theater on the exact same day for that worldwide release. That's kind of interesting. They always used to delay those things. It looks like movie theaters and these streaming services are going to have to get on the same page with this one. This is one move in that direction.
Well, I think it's an interesting test. I think you're going to see a lot more of this coming into the future, quite frankly. We've seen major Hollywood studios make decisions about 2021 about releasing major releases straight to their streaming service. Disney did it, and I think the pandemic opened the door for that, quite frankly. And Disney did it last year with Mulan, to a very big success with the Mulan release. And so I think you're going to start seeing a little bit of more of this even after everybody is vaccinated, and even after everybody's back out there and the COVID's completely in the rearview mirror. I still think you're going to start seeing some of these giants out there release major titles direct to their streaming service.
But
Yeah.
I got thoughts on this. But so by doing both, I mean, I would do it, right? They're trying to get both demographics. I mean,
well, what you're trying to do, Ty, is you're trying to placate your U.S. consumer base while you hit home runs internationally. And so you release in major theatric releases internationally. That international box office is so strong for Disney, and then you just rake it in on Disney Plus here in the U.S. and allow you to build your juggernaut. It's a pretty good game plan for Disney, and now they're just testing the waters with it.
Yep. Nope, that's right.
I like it.
I think it's a smart move. We'll see how it plays itself out.
It's a decision. It's a decision and a test leaders make. It's a good thing. Whether it works out, you don't know. You just don't. But it's a good idea to test.
I agree. We also had a couple other earnings, companies that reported earnings here today. I do want to round those up next. And then the best news, biggest news of the day actually is the Intel news. We'll get to that one last because I do want to have a conversation about the semiconductor industry off of that news a little bit. But let's do a quick earnings roundup, Matt. GameStop, Adobe.
We got 3 of them. We got 3 of them today. GameStop, Adobe, and General Mills here. Let's start with the meme trade, the one that started it all, GameStop. GameStop comes out, and obviously a very anticipated earnings report. I mean, I'm not sure you could tell the story of the quarter that GameStop had, because it has absolutely nothing to do with these earnings numbers. But the earnings numbers itself, they were a miss officially. Came in at 134 versus the expectation of 146, so just a slight miss on your EPS numbers. Revenue came in slightly underneath at 2.1 versus the 2.2. Revenue did grow 3.3% year over year. Same source sales quarter to quarter were up over 20%. All fairly decent. Raw numbers were not bad. On their online had a fairly big, their e-commerce had a fairly big, I believe it was like 175% increase year over year. Also good, but again, you're talking about a company that is primarily a brick and mortar company. And honestly, the problem is not in the raw numbers. The problem is, quite frankly, in the failed leadership to embrace a new generation of traders and to ensure that their questions were heard in an absolute, what I would consider a disastrous example of failed leadership at GameStop, to not even have a Q&A after that conference call, to not even discuss the primary storyline of what impacted GameStop over the course of the last quarter. I felt was a really disingenuous to the investors, and especially to that new generation of investors. I thought it was a disgusting display of leadership, quite frankly. The raw numbers weren't bad. Their leadership was.
Well, and the other thing is they didn't even talk really about anything on the conference call from what I read.
They didn't. No, it was short. It was to the point. They went through the numbers, and that's about it. They didn't talk about they mentioned, because somebody was like sticking a knife in somebody's back somewhere. They mentioned the potential of a stock offering, but they just hinted to it. It wasn't transparent. They're all over the board. And again, this is what bad leadership does. And this is what people are investing in. I get it. GameStop's, I love GameStop. I love going into GameStop. I love taking my kids into a GameStop. I've invested in GameStop in the past. I had GameStop on multiple lists of mine back in the day, both in 2014 and 2015. But this is a company that their CEO, I just don't know if he has what it takes to meet this moment. And maybe the up and comer they brought in does. I forget his name off the top of my head, Tim, so forgive me. But they didn't even talk about that. They didn't even talk about what they're going to do online and what their plan is for e-commerce and how they're going to target the gamers. I mean, they missed an opportunity here. Full stop. They missed an opportunity.
Yeah, I agree. And the market is, obviously reflecting that here, down 20%.
Listen,
finally on some news.
If this was a TV show, it's the office of the scene where Dudler Mifflin is going to declare bankruptcy and all the investors like, what's going on? Like answer our questions. And Dwight Schrute needs to give up and give a speech. Like, this is where we're at.
I think I remember that episode.
We need a meme of that scene from The Office over GameStop's earnings.
Where's my meme guy?
Where's my meme guy? Tanyan. I need a meme of that. And Dwight Schrute, who's trying to ask the question, is the overlord of Reddit.
That's right.
Like, it was a bad earnings call.
All right. What about Adobe?
Adobe, slightly better performance here on Adobe, I will say. Adobe's got some technical challenges that this area of the market has a little bearish retracement, kissing off 200-day moving average. Never got anybody excited. But Adobe's raw numbers were better than their technical condition, and certainly better than that bearish engulfing candlestick pattern we're seeing on Adobe here. Raw numbers, 314 versus 279, 3.9 versus 3.8, 26.3 increase in year-over-year revenue, and a slight increase in guidance here. I didn't look too much into Adobe. Don't track the company as much as I track other companies. Quite frankly, don't even like the company that much. But overall, raw numbers were par for the course, and they did the trick, Tim. You know the trick.
Yep.
They did the trick, right? Where they technically increase in guidance, but it was within the overall range. Right? So they're like, we did an increase in guidance, 2 pennies against $38 quadrillion. Well, okay, so technically an increase in guidance, technically a beat on revenue. The EPS numbers came in at a pretty decent beat there. Here, it's got a lot to fight against technically here.
Oh, it's a mess from a chart perspective, Tyler.
Yeah.
I mean, you're rallying back into the moving averages. You just hit your head. Now you're post earnings. That is not an attractive chart right now, is it?
No, if it was 2 years ago, we'd all short it.
Yep.
Remember what that was like?
It was beautiful.
No, it's not a good chart. I mean, the sector's out of favor. Software's out of favor right now, and the technicals are tough. So, yeah, you got to wait. I mean, you got to wait.
I agree.
And then last is General Mills. And I brought up General Mills for a couple reasons. Number one, Mark made a comment, I believe on Monday, or maybe it was last week, I can't remember, regarding the packaged food companies, and he was a little bit concerned about the packaged food companies. General Mills, obviously a packaged food company. They came in, and General Mills is not on our Tackle 25. Conagra Foods is CAG. If you'll take a look at CAG a little bit, fundamentals do matter in value apparently, but so Conagra is getting caught up in the volatility of General Mills here today. General Mills raw numbers were not bad, 82 against 84 cents, so nothing really to get too upset about there on EPS numbers. Revenue came in line. They also had a slight increase in overall revenue guidance. But they did announce they're selling their portion of their European stake in their yogurt company, Yoplait. You guys know the Yoplait brand?
Sure.
Yep.
Right. And so they did say they're selling that stake, and that's what's really kind of creating this volatility here. Nothing really to see on General Mills. Just wanted to bring it up because of that context we had on packaged foods. And obviously Conagra is getting caught up in that a little bit, Tim. But that's it for earnings.
Yeah. Quick little earnings roundup. Obviously, GameStop's going to capture the attention of people who've been paying attention to markets. It's not exactly moving the market right now, though. We are going to be getting back into full swing of earnings season here in about 3 or 4 weeks, though. So, Matt, I don't know if you're ready for that, but we will be hitting it hard and heavy again on the earnings front when they start to get released. One last story I did want to get to, though, and bring up Intel if we can. This is probably obviously the big story of the day, actually, quite frankly, and I wanted to leave it for last, leave the best for last for a couple different reasons. It prompted me to want to dig into the semiconductor industry a little bit. I think there's quite a few interesting charts and opportunities in semiconductors right now. We'll have that conversation right after I give this news. Intel's going to invest $20 billion in 2 new manufacturing plants in Arizona. They have plants globally. They already do have a plant in Arizona, but this is going to be a huge new addition. They call these things fabs. I mean, that's the industry term for it. Intel labels them that as well. And they're going to use those not only for their own chip production, but also to partner with many big names. And Microsoft's CEO was on this conference call, which I found interesting. The CEO from Microsoft supporting this news. It's a good shot in the arm for the semiconductor industry, production in the US, all of that kind of stuff. Matt, what is your interest in Intel and the news specifically here?
If this was Tesla, they'd be up 20%. What's going on with Intel?
I don't know why it's not running on it.
Like if this was EV battery, Arizona 20 billion, it's game over. Like Kathy Wood's hitting her $3,000 target tomorrow. Like, and Intel selling off intraday. It makes me not trust Intel.
Yeah, I agree with that.
I thought the news was positive.
I thought it was great
My
news.
takeaway was this is a positive event for Intel. It's good investment in growth. Intel's kind of been overshadowed by the Microns, AMDs, Taiwan Semiconductors. I mean, we're talking about a company that was one of the bigger ones out there in the world. 30% of all chip manufacturing in the 90s came through the US. Obviously, other countries have really taken into Intel's market share over that time frame. To the point where Intel was a little bit of a joke, in comparison to all these other semiconductor companies. When you and I first started trading, all we talked in the semi space was Intel. But then over the last 10 years, it's Micron, AMD. Over the last 5 years, it's Applied Materials, Taiwan Semiconductor. When you look at the Tackle 25, Intel was there the first, I believe, 3 years of it. But ever since, I mean, you're talking Texas Instruments, you're talking Applied Materials, you're talking Marvel, you're talking, Maxim, you're talking, these more growth-based companies. And so when I read the news on Intel, my immediate takeaway was this is a positive growth storyline for Intel. And even though the one-day market response here today is kind of puking up that news, I do find this to be a positive thing for Intel moving into the future. And I don't think we should overreact to one day's price action in a fickle stock market when Intel's investing $20 billion in their company. So with Intel specifically, I think you got to give the market a little bit of time to digest this news, because this is a pretty big investment, guys. We're talking $20 billion. When Tesla was doing their 5-year, hey, we're going to pitch you a $5 billion battery plant, and we're going to take this to Texas, Utah, Nevada, New York, right? And we all freaked out about this. This is a significant investment in Intel. I believe it to be a positive. I think the market's got it wrong here today, but let's give it a little bit of time.
Tyler, this prompted me to look into the semiconductor industry, and I'm with Matt. I have very tepid interest in Intel, very little interest in the short term. Long term, I have interest though. Long term, I do. If it could break out of a long term range and start to behave, I might be more interested. But
I guess do you have interest in Intel more than Nvidia or Broadcom or Texas or Qualcomm or Micron or AMD or Mac or some of your younger up and comers, Maxim, Skyworks, Xilinx, ADI? Like there's like I said, Intel, I think this is a good storyline for Intel, and it's a good investment for Intel, but it doesn't it doesn't change my belief that the investment is not in Intel for people. I just, unless you're looking at cash flow and dividend covered calls and just never, if you're looking for growth, I just think you got 10 better companies off the top of my head that are better growth companies than Intel.
Yeah. Yeah, within semiconductors specifically,
Yeah.
like you're talking about, you just named a bunch of them. And, you know, Tyler, I wouldn't mind looking at some of the semiconductor stocks here today, kind of flashing around the marketplace. Matt, I know that you did, you know, sector analysis. You went into the industry here today, looked at all of the charts. You found some of your favorites. I've got some of my favorites as well. Let's just look at some of the big names here, you know, Tyler. Taiwan Semiconductor, TSM, you know, for example. I have very little interest in the short term here, but I still love this company long term. So from a chart perspective, this one's lower on my list, Matt, as we're breaking support here literally today. There's not a technical trade there. Does anybody see anything I'm not?
No, I have zero interest in any stock that is looking very similar to the SOX index right now.
Mm-hmm. Well, let's look at the SOX real quick. You know, let's
take
take
and Taiwan's breaking down and the SOX is retracing, but anything that is in the range of the 50-day moving average right now is now Taiwan's different. Taiwan's breaking down. This is retracing, but I don't have interest in Taiwan for the breakdown. But anything that is remotely looking like the sector is just performing with the sector. You might as well just go buy SMH. I mean, you know, so for me, yeah, it continued, Tim.
Well, no, and then there's some areas that are absolutely outperforming. Like I looked at Texas Instruments this morning.
Yeah.
They're talking about in pre-production. See, this is not working right with the industry or the sector there. It is actually outperforming, breaking into new highs. It hit a new high just yesterday. So TXN, relative strength here, obviously. So there is some nice areas. NXPI, you know, a nice little pullback, fill NXPI real quick. A pullback filling the gap that it put in just a couple of weeks ago, coming back into an old level. There are charts that are grabbing my attention relative to the others. What about you guys? Matt, what did you pick up on? What grabbed your attention?
Well, and again, if you're looking at the SOX index itself, you're looking at a little bit of, and if you come back to either SMH or SOXX, either one's perfectly fine. When you're looking at the index itself, you got to be a little concerned about the index in the short term. Obviously, the Intel news was a little bit of a net positive to the sector today, but we're talking about still looking at an environment where, very similar to the NASDAQ, caught up into that bond market storyline, the inflationary, how that's going to impact growth storyline. You're caught up in a technical condition short term where you're looking at a potential bearish retracement, and intermediate technicals look like a little bit of a head and shoulders reversal formation. And so you're in the muck right now with the semiconductors, and that's why I said I don't really have any interest in the short term on anything that remotely looks like the sector, because you might as well just go do the sector, and I have concerns about the sector. So when you're looking at this, first understanding this market, you have your major players out there, right? And I'll just rapid fire this. Your major players in semiconductors are Nvidia, NVDA, looking very similar. You have Intel, obviously, that we've been talking about. You have Broadcom, AVGO, Texas Instruments, TXN, Qualcomm, Micron, and AMD. Those are your big dogs in the semiconductor space. Those would be your 100 billion plus type companies. That in Taiwan Semiconductor. You then have and those are all mostly growth-based companies. I would say Intel's kind of a little bit of a combination, trying to become more growth. But then you got your high flyers there, and that's your MXIMs of the world, Skyworks Solutions, SWKS, Tackle 25 member last year, Xilinx, XLNX. And so you have these more growth based that are in the 20 to 50 billion market cap range that are trying to become those big dogs out there. And when you're looking, and I'm just looking at the semis within the S&P. I'm not looking at your mid cap and below, Tim. And the one you brought up was that mid cap level, the bullish trace. You can find some darlings there, but I'm looking at the big cap stocks right now. Yeah. And you can find a lot of stocks that look very similar to the sector, But when I'm looking at here, I think you got a few potentials from a strength perspective that are outperforming the sector. And in those, and you got two that are specifically semiconductor companies, and then you have one that is a semiconductor equipment company. Your two pure semiconductor companies would be Texas Instruments and your Intel. And when you're looking at Texas Instruments and Intel, I love Texas Instruments. This is one of my, I love this company. It's very consistent on the 50-day moving average. It's never one of those gonna knock your socks off type volatility scales. One thing to keep in mind here, though, your range up on a potential breakout of 180. I think this needs some time in the cooker, maybe a retracement to come back down to that 50-day moving average. I would love a 50-day moving average test here, increasing that support level on the potential breakout. By the way, I think a 50-day moving average bounce on Texas can be traded, but I just think we're a little overextended in the short term. Let's put it in the cooker and give it a few days of consolidation to see how Texas plays. Intel, I don't have interest in. I just don't. I respect what they're doing here today. I do. I respect what they're doing. They're trying to do their whole IBM growth and how can we become that Microsoft storyline of 2020. I get it. Everybody's using the 2010 Microsoft example of trying to take a value boring company into the sexy machine of Microsoft. Microsoft did it. 1,000 others died doing it. So I respect it, but you're gonna need some time to shake off that rust on Intel. Go look at IBM for the last 15 years. It hasn't shaken off that rust. So I don't have interest in Intel, but I do respect what they're trying to accomplish here, and I do think it's major news from the investment perspective. But when you're looking at the strength, you're looking at Texas and you're looking at Applied Materials here, AMAT. Now, Applied Materials is not a semiconductor company. It is a semiconductor equipment company. I love the consolidation over the last 4 days here. Consolidation right south of that 120, trying to break out of 120 on Applied Materials. I feel like at this point I should be a paid spokesperson for Applied Materials, but it has been on the Tackle 25 for 5 consecutive years for a reason. It's a fundamental darling in this, and you're looking at a cup and handle type continuation breakout pattern. So I do think if you're looking at strength here, Tim, you're looking at Applied Materials. Maybe Texas after some degree of consolidation, kind of like Applied Materials has had for the last 3 to 4 days. Maybe you're waiting for that. But I do think if you're looking at strength, it's Texas and it's Applied Materials. If you're looking for potential reversal patterns, I think you got to start with where a stock is in relationship to its 200-day moving average right now. With the sector itself kissing against the 50, obviously a stock sitting around the 200 would have some significant separation. And I'm looking at 3 potential stocks here. Number 1 is AMD, dirty sexy money darling over there at for Tackle 25 AMD. It's in some chop right now, and it's nasty chop, and we all know AMD can absolutely fly, and we're not reversing yet. However, you're starting to see the beginning points of potential reversals. Number 1, the violation of the 200-day moving average, although concerning, just stopped on a dime. And Allen Iverson crossover right at the previous level of resistance. You could see a scenario where you start seeing double bottom type analysis here, maybe even hypothetical, shockingly increasing in support levels as we start to see that test of that 200-day moving average. So we're in the zone of potential reversals on AMD. That's something to keep an eye on. Qualcomm, very similar to AMD. Qualcomm sitting at that 200-day moving average, not nearly as volatile as AMD, but again, Qualcomm's the bigger dog and than AMD. AMD would be the reversal I like, but I like volatile technical reversals that are consistent on support. Qualcomm, it's 200-day. I mean, you see that 200-day, the same type of analysis. AMD stopped on a dime, Qualcomm stopped on the 200-day moving average. So Qualcomm's showing a little bit more bullish behavior here than AMD is. AMD's got to hold support. Qualcomm's really kind of just in that traditional test of the 200-day moving average. And if you look at the weekly chart on Qualcomm in comparison to AMD, I also think you got a pretty decent read on Qualcomm, especially with the trigger above that line north of Tyler's wicks there. I think you got a pretty decent trigger on that with some continuation off that 200-day moving average bounce, also sitting at a historical level. AMD, on the other hand, on the weekly chart, that is, AMD, on the other hand, not as clean of a technical pattern as you do on the Qualcomm. And so I do think if you're looking for reversals, an aggressive trader's probably looking at the AMD. If you're looking to park, you're looking at more of the position style investing route, you're probably looking at Qualcomm from a reversal. And then Nvidia is just the biggest dog of the bunch, the only stock in the semi space over north of 300 billion in market cap. And Nvidia, very similar to your AMD type analysis on the weekly chart. The daily chart's a little choppy, a little mixed, but very similar to what you're seeing with Broadcom. Reversal characteristics, I would rank it 1 Broadcom, 2 Nvidia, with 3 AMD. But the trader Mark Stead, for example, he'll love the volatility of AMD. Tyler might prefer, something like, if Tyler's running my mom's money, Tyler would probably be like, hey, I like Qualcomm here. Right. So I like the reversal characteristics, and I do think they do fit different demographics there. Cash flow, there's 3 stocks in the semi space that I feel are very good cash flow stocks with all the things that you're looking for. That would be Marvel, that would be Applied Materials, and that would be Taiwan Semiconductor. And, on all 3 of these, Marvel and Taiwan's clipping support right now. Mark, do you have any interest selling naked puts on Taiwan down to around that 200-day moving average?
Yeah, listen, I'm a little interested in semis, especially after the volatility with rates and text maybe flushes out. I mean,
Yeah.
You can't forget that, in this big cyclical movement, semis are part of the cyclical movement. I mean, you're getting caught up in tech right now, but semiconductors are part of that cyclical movement in a bullish economy.
Think about the GM news today. The GM news was a cyclical news story, but what was it on? Semiconductor chip shortages. It's 100% part of it. So, but I do think if you're looking at the cash flow side of it, when you're looking at liquidity, fundamentals, position, everything we put into the Tackle 25, there's 3 stocks in the Tackle 25: Marvel, MRVL, Applied Materials, AMAT, and Taiwan. We're about near to the end of the quarter. I am going to do a Tackle 25 quarterly update fairly soon. I've looked at the semis here. I wouldn't make any different decision today as I made 3 months ago, Tim. They're all perfectly fine. I have no issue. If people are looking to cash flow them, they're fine.
Yeah. Well, and AMAT, not just fine. It's obviously breaking into a new high here today. That's a beautiful looking chart if you're looking for momentum. But I'm interested in some of these deeper, retracements and pullbacks and sell-offs like you just walked through, Matt. That was a very, very good.
I think we need time. I do, but I do think you got some fairly decent standard reversal characteristics in Nvidia and Qualcomm on the 200-day moving average bounces. I like Qualcomm a little bit better there. AMD needs some time, but you got a technical reversal pattern happening there. But again, the strength, you're looking at Texas and Applied Materials.
Yeah, fantastic job. Thanks for the roundup on the industry. I appreciate that. Tyler, anything you want to add to semis?
No, I think it's a good reminder that when these guys get beat up, if you like them longer term, I mean, your job is to stalk them and look for bottoming patterns. If you believe in the long-term fundamental growth story, then they're all eventually buys. It's just a matter of when. And if you don't have to try to catch a falling knife and buy Taiwan Semiconductor today. Maybe it drops to 100 and it gives you a nice bottoming pattern. I think it just goes to show that you don't want to completely abandon a sector when it falls out of favor, particularly one that you may like semiconductors. You just have to be patient. We've been so spoiled for the last year of stocks just going straight up that when they go down, I think it's very easy to be like, hey, this sucks. What's wrong with the market? You know, you just be opportunistic and realize it'll come to you. You know, just
Well,
wait for
and
the fat pitch.
specifically Taiwan. Go back to the emerging markets very quickly. EEM.
Mhm.
Now go look at Taiwan. Taiwan gets caught up a heck of a lot more in the international emerging market storylines than it does the same storylines that Broadcom, Qualcomm, AMD,
Yeah.
Intel get caught up in. And so that's why you're seeing separation on the chart on Taiwan versus some of those other semiconductors.
Good point.
It's really caught up in the international storylines.
Really good point. Yeah, I'm glad you brought that up because that makes a lot of sense too. So good. All right, guys, that is the industry roundup we have for the semiconductor stocks here today. I see Coach Mark obviously came in here just a few minutes ago. Marky, I believe you're probably here to promote tonight's event, which is going to be our Trade Masters event. I was talking to Tyler about what he's trading right now. And Tyler, you don't have to give any of them away if you're going to bring them up a little bit later. You've got some good stuff on your radar, Tyler. I believe you're going to have the heat ready for tonight during Trade Masters. Mark, who is the challenger?
Listen, we
tonight?
have a battle of pure technicians tonight. Like, you know, little thematic traders like myself. I'm going to get schooled with two pure technicians going head to head. We got Tyler Craig and Frank Martin, two chartists, technical analysis, poo-poo all of your big whatever you think you're scared about. Technicians going head to head. Should be an epic clash. Tyler Craig, Frank Martin, 7 p.m. Eastern, YouTube channel here on Tackle Trading.
You know, Tyler, give us a little teaser here. You know, like maybe give me an idea of the kind of patterns you're looking at right now. Maybe it's a pick tonight, maybe it's not. Give us a little preview for tonight if you could.
Listen, it's going to be epic. Okay, I'm not showing you crap. I got the judge here. It's just going to be good. All right. I'm actually thinking about maybe mixing in a bear trade or two. And that's saying something because I don't usually do a bear trade, but I don't know. Listen, the market has been choppy. It's been a little messy, and it has been a little bit more challenging recently. But I'm hoping that these picks tonight will give you guys something to think about and give you some success. So I do have some good setups, and I'm keeping them close to the best. So nice try. Nice.
Who do you
try.
think is the more pure technician?
Frank is.
Or Frank is. I think so too.
Frank does not care if nuclear bombs are falling. What does the chart say?
Literally, there could be a nuclear bomb on its way, and he'd be like, "Go to the chart."
Now, this is Frank's first appearance on Trade Masters. Is that right?
This is correct.
Well, I think the tackle trading community, anybody who's been around the halftime report for any amount of time, you've had Coach Frank here on Fridays every week for a very long time. You know the way that he does analysis on the charts. Tyler, I think this is going to be much stiffer competition faced in the recent past. I don't know what the line is
How much
here.
does the jokes weigh on your subjective?
I don't know if we're doing jokes tonight with Frank. I don't know if
I was gonna
he has
say,
jokes prepared. So,
like, I'm not sure.
I don't
you
either.
bring
I vote
beer.
no jokes.
listen, I've had requests. We didn't do jokes last week. I had requests. I will bring some jokes tonight.
Yes. I like that. Yeah.
How about that?
I'm not sure you asked me or Frank to bring jokes.
There's just certain people that you just don't ask to bring jokes.
Yeah.
Why not? I mean, why are we throwing Frank? What is he, a grumpy old man? He can bring a joke.
Yes,
Bring a
yes,
joke.
yes,
Absolutely.
Here, let me give you a Frank joke.
He is
Tim.
a grumpy old man.
Knock,
yes.
knock.
Who's there?
I don't care. Let's get back to work.
Yeah, that's.
We'll see. I will talk to
Frank
Coach
doesn't have
Frank.
time for your humor.
I don't believe you guys. I believe Coach Frank could bring the funny tonight if he chose to. So give him the opportunity. Maybe he doesn't, Mark. Maybe you are the one who tells the jokes tonight. I don't know. I'm most interested in the analysis, in the picks, in the competition to see if Tyler can fend off Coach Frank. I think it's going to be very difficult.
Okay, so where's everybody's head at? Where's Team Tackle on? Jokes, yay or nay?
Do you guys like the jokes?
We have internal debates on this stuff, and I'd like to get where Team Tackle's at. Because I would like to limit the jokes in Trade Masters.
7 p.m.
But I'm kind of like Frank. I love the analysis.
A couple of questions coming in as people answer that. There's always a few second delay. We actually do the show 7 o'clock Eastern here. I got a couple of those questions. In the chat.
Trade Masters,
Wednesday
7
nights.
p.m. Wednesday nights. Two of our coaches compete for the love and adoration of Coach Mark in our community. And I know Coach Mark is influenced heavily by the community.
Yeah, and if you don't know what Trade Masters is, each coach brings 5 picks. So
Yep.
they can be short-term setups, they can be cash flow trades, they can be long-term investment ideas. It just depends on what the market's given us that week, right? 5 picks, each of them. It's great for those midweek. Hey, here's 2 great coaches giving you trade ideas midweek. It's really, really good.
I'm not sure Frank's bringing any high volatility naked puts tonight.
So we're getting some mixed answers here. Yes on jokes, yes on jokes, nay on jokes. I like the jokes, more jokes. Jokes are funny, but too many get old. I'm getting all kinds
kind of there. Like, that's where I'm at. Like, I like a joke. Like one.
I like a good laugh.
A joke.
We're off the rails here.
Oh.
As the person who has had to find 300 jokes already, I support less jokes.
Yeah,
that was Tyler's snooty way of saying, "Listen, I win so often. I'm all the time. I'm running."
That was some humble bragging.
That was some subtle bragging there, Tyler.
Perhaps.
I've always been on the side of bring your best joke. Give me one joke. Give me your funniest joke.
There.
Make
me laugh or not.
Best. Yeah, that's right. Either pick your best or you
hit it or not.
I don't know.
You got that fastball down.
Mark, you're the judge. You're the host. That will be your call, obviously. And you're gonna have some fun tonight, regardless. So
I like it. Let's one joke. Let's try one joke. Bring the one joke.
One joke, Tyler.
One joke won't take long.
Your best joke.
Right? One joke.
One joke. We'll do the final round. You get one joke, and that tops off your 5 picks. I like that.
I do like it as well. Yep. Join us tonight, guys. 7:00 Eastern. You'll get a notification.
I love what just transpired, by the way.
I do too. If you click that bell on our channel, you will be notified anytime we do go live, and we'll be going live tonight, having some fun. And I don't know what a Vegas line would be here, Marky, but I think it's probably even money.
Come on, I said the Vegas lines.
I didn't hear it. What did you say?
Vegas lines. First and foremost, Coach Frank it's his first go around on Trade Masters. He's not familiar with the things you need to do to win the hearts and the minds of the judge. True. And so Tyler's got to be the favorite here. He's got to be the favorite. He's got the experience. He knows what the judge likes. So I got to put him in favor. But Coach Frank is a assassin from a technician's perspective. The man has, out of all the coaches at Tackle Trade, I'd put Tyler and Coach Frank 1A and 1B with the eye test from a technician's perspective. I mean, both of them are high quality technicians. Love them both very dearly. If they told me what their analysis would, I would blindly trust it. That's how much I like their technical skill set. So I would put their technical skill set fairly equal. Given Tyler's experience in Trade Master specifically, you got to give him the edge here. I'm setting Tyler as a minus 140 favorite. So it's a bigger than you thought. It's bigger than you thought. I'm going not minus 140. We're going Coach Frank plus 125.
I'll take the money line bet. I like the dog, Tyler. I think
I'll lay the points. I'll lay the points tonight. I'll lay the points. I'll take it. I'll lay them the 145 or the 140.
We might be playing a little bit of golf here this afternoon.
Dude,
so
can I use Bitcoin on that bet, or do I got to convert it to USD first?
You got to convert it to
There's
USD.
Your one joke, my friend.
Yes, they're all love it.
All right, that's gonna get us to move into
that would have won Trade Masters tonight.
Wrap of the show here, Tyler. Final thoughts from you. Just in market conditions in general. What's on your mind, my friend?
What I don't want to walk back my earlier comments, but look, the market has been a little bit messier. I think from like a swing trading growth stock perspective, we need to get that NASDAQ back above the 50-day. The longer it takes below here, I don't know. It's like today's price action doesn't inspire a ton of confidence for me. We also just fill the gap in small caps. This feels a little heavy in some of these areas. Mm-hmm. I still think the pullback in energy in some of those other areas were fine, but we're starting to see just more separation here between the haves and the have-nots. That makes, I think, for a little bit trickier environment for swing trade.
Mm-hmm.
It only gets easy when all the indexes and time frames are aligned. And I maintain what I said 2 days ago. We're closer to that alignment than we were a week before, but we're not out of the muck, and we still got some work to put in.
Yep.
Mm-hmm. Mm-hmm. Mark, final thoughts from you, sir.
Listen, I'm a believer in Bitcoin. I'm a believer that we're going to have inflation. I'm a believer that we're going to have a full reopening of the economy. I am responsibly positioning accordingly. I love give me deeper pullbacks and cyclicals. Listen, I just think the GDP is going to be rocking. I think inflation is going to be here, and I don't think that value trade is done with its legs yet. So that's what I'm looking forward to.
I don't think the cyclical trade's done either.
I think it's just getting going. Matty?
Yeah, the next 10 years getting going.
Yeah, me too. Any final thoughts there, Matt? Anything
No, I had mine with Tyler's. We're good.
I thought so as well. All right, guys. My final thought's very simple. As always, just keep running your daily routine on a daily basis. Stay rule-based. Absolutely do not put the cart before the horse. I saw a little bit of the conversation here today. Really enjoyed it. Really loved it in the chat, guys. Keep that positive. Keep it light. One of the newer traders we have out there, he was mentioning he needs to commit to education before he just starts pushing money into the market. Got stopped out on his first couple trades. 100% I agree with you, young man. You absolutely need to put the seat time in, learn how to do this stuff properly before you ever go into application. So it's education before application. That is the process that you go through in trading and learning how to trade in the financial markets. Great job from everybody.
The huddle guys.
Today.
The huddle guys, just a lot of work being put on in the back to make sure that huddle gets dialed in on a daily basis, guys. Very much would support it. Support 5-star reviews, iTunes. That allows us to get that message out there a little bit more. So appreciate that, guys. So thanks for showing up every day, Team Tackle. Love hanging out with you. We'll be back with you tomorrow. Later today, we got Trading Masters. Coach Mark, Challenger. Coach Frank taking on the champ, Tyler. Love it.
See you guys then. And then